Hi, this is Jason Ball of Ball & Company. How long does it take to be considered a long-term investor? 5, 10, 25, or 35 years? The answer, of course, depends on your risk tolerance, but it might be longer than you think. To figure out how long you need to be invested to get long-term returns, take a look at this table. It comes from Dr. Craig Israelson, a leading educator and financial author. This table summarizes the entire 93-year history of the 4 core holdings most utilized by investors. Return and risk statistics summarizing the performance of stocks in both large and small companies, 10-year Treasury bonds, and 90-day Treasury bills from 1926 through the end of 2018. This one table shows you the relative risk and returns of each of these key investments. Now on the right, we've added the 93-year results of a mix of the 4 assets, a diversified portfolio. Now this is where it gets interesting. Each group of bars shows how often the 4 asset classes and the diversified portfolio achieve the long-term return of 9.9% on large company stocks over rolling periods of 5 years versus 10, 15, 20, up to 35 years. For example, large cap stocks gain 9.9% or more in 57% of the 89 rolling 5-year periods from 1926 through the end of 2018, and in 92% of the 59 35-year rolling calendar years, large cap stocks return 9.9%. The longer holding periods are the tallest bars, showing that the longer your time horizon, the more likely you were to achieve long-run returns. Once you realize the risk-reward dynamics of achieving a long-term return, you should have a much clearer appreciation of just what it takes to achieve that long-term return. The other key takeaway from the analysis was that the diversified portfolio averaged 92% of the return of large company blue-chip stocks annually, but with just 80% of the volatility. That's important because keeping volatility low makes it easier to stomach market turbulence and achieve the long-term return. Now, we all know past performance does not guarantee future investment results, but ignoring history is unwise also. Successful long-term investing can really only be achieved by developing a clear, concise strategy. Investors who follow a plan have a higher probability of achieving their goals than those who act on their emotions or make frequent changes based on the events of the day. Please contact us with any questions, and feel free to share this video.